Is this a response to President Trump's claim that China is a currency manipulator?
Well, certainly China's policymakers are very aware that the yuan is a stick with which Trump would like to beat them, and they want to push back on that, and they want to reiterate, they feel compelled to reiterate again that they are not going to use the renminbi as a tool in this trade spat. They say that they are allowing the market to play a greater role in the exchange rate. They say that the good economic fundamentals here in China, is how they described it, will support the currency going forward. Take a listen to what Li Bo had to say yesterday in Beijing. He's the director of the Monetary Policy Unit at the PBOC.
The flexibility of yuan exchange rate has improved significantly. We put an emphasis on letting the market play an increasingly crucial role in deciding yuan exchange rate. We will not use competitive currency devaluation or use exchange rate as a weapon in response to external challenges from trade frictions. We will stick to bottom line thinking and are confident that we can keep yuan exchange rate basically stable at a reasonable and equilibrium level.
So yes, pushing back against Trump's claims that they are manipulating the currency. And of course, Trump's notion that this is happening goes against what we hear from the Treasury Department in the US, which did not name China a currency manipulator in its latest report that came out in April, and against what many economists view are measures that the policymakers here are putting in place, in fact, to bolster the currency in light of what we're seeing from the Fed rate hikes, in light of a slowing economy here, and in light of the trade tensions. You've got, of course, capital controls that remain in place. You've had window guidance. You've had stronger fixings. And in fact, Bloomberg Economics say that the yuan is still overvalued, probably by about 6%, despite the 5%, almost 5% drop we've seen versus the dollar year to date. We also heard from the PBOC, by the way, on measures they fleshed out that they want to put in place to support the economy as these trade tensions continue. They want to see more credit going to small firms, to high-tech manufacturers, to the services sector, saying that they still want to avoid credit going to areas of the economy where there's excess capacity and highly polluting companies. But nonetheless, these are measures that we've heard outlined broadly before. They put a bit of flesh on the bones, and of course the markets expect potentially additional supportive measures should Trump go ahead with further tariffs further down the line.
And Tom, we did just hear from the president during his rally in West Virginia saying allowing China to be bigger, not going to happen now. How should the Chinese approach this right now with these talks just days away?
Yeah, well, many economists would take issue with that comment, I think. And if he goes into these meetings, or at least if his officials go into these meetings with the Chinese with that kind of line, it's not going to play well at all. But these meetings are expected still to happen, probably kicking off tomorrow in Washington. The Vice Commerce Minister, China's Vice Commerce Minister, will be there with a delegation of Chinese officials along with their US counterparts. Now, we're not expecting a breakthrough, but they could lay the foundations for future talks. Of course, it's happening as both sides are expected to pull the trigger on an additional $16 billion worth of tariffs on both sides. And it's also happening as this consultation period continues in the US over proposed additional tariffs on another $200 billion worth of Chinese goods. China has said it would respond to that with tariffs on $60 billion worth of US goods. So really then there would be additional momentum if we get to that stage for these leaders to meet. And there's an option. There's a potential meeting point at the APEC summit in November where President Xi and President Trump could meet. And if they fail to meet then or fail to come to an agreement, there's the G20 summit in Argentina towards the end of November, early December. And we've heard from the likes of Maersk's CEO and BHP talking about the damage to the US economy. But we've also done, Bloomberg, a survey of economists who suggest that if we see these additional tariffs from the US on Chinese exports, you could see a drop in Chinese GDP, cutting the growth of 2019 for China by about 0.3% if that continues. So clearly there is damage on both sides. For now, we're looking to these talks in Washington.